Asian stocks steady this morning as Chinese shares moved higher on hopes of additional stimulus to cushion the economic blow from a coronavirus outbreak. But risks remain as the illness continues to spread and the death toll neared around 500. The People's Bank of China is likely to lower its key lending rate, the loan prime rate, on February the 20th and cut the bank's reserve requirement ratios in the coming weeks. The People's Bank of China has already pumped hundreds of billions of dollars into the financial system this week. So this helped Chinese stocks stabilize on Tuesday following a rout that wiped out around $700 billion in market capitalization on Monday when Chinese markets opened after that extended lunar holiday. Now, the Nikkei in Japan is more than 1% to the good at the close of trade, rising to 23,319 points. The Hang Seng is more than 1.1% better off as well today, ending the day at 26,659 points. And the Shanghai Composite has added 1.25% to its numbers, closing out at 2,818 points. The Nasdaq hit a record high last night and the S&P 500 posted its biggest one-day gain in about 6 months as fears of heavy economic impact from the coronavirus outbreak waned. After that intervention by the Chinese central bank, the Dow Jones Industrial Average notched its biggest single-day rise in more than 5 months as the stock market recovered from steep losses the week before. The People's Bank of China, as we've just spoken about, injecting a total of 242.7 billion rand through reverse repos on Monday and Tuesday, as the bank says it sought to stabilize the financial market expectations and restore market confidence. The Dow Jones Industrial rose 1.4% to 28,807 points. The S&P 500 gained 1.5% to close at 3,297 points. And the Nasdaq Composite added 2.1% to 9,467 points. Let's continue bringing you market news. Arabile Gumede is standing by. Very good afternoon to you, Arabile. What's moving markets this afternoon?
Good afternoon, Nzinga. Look, so the market has certainly gotten perhaps another rebound today, perhaps not necessarily a recovery of sorts, but having run really hard into some negative territory over the last 2 weeks or so, we're certainly getting some sort of respite with the market perhaps ticking higher ever so slightly. So the coronavirus certainly still the biggest newsmaker at present. Of course, some equity news here and there, and of course some company news as well out of the United States, but not really too much to write home about. The likes of Ford, unfortunately, delivering forecasts with regards to their production that isn't necessarily great. The number 2 US car maker seeing a massive wipeout of its share value as well then yesterday in US trading. So massive falls there. In comparison, however, Tesla just keeps on climbing. Elon Musk's share now with regards to profits out of that company really range around 30 billion US dollars. So really getting to coin it. Clearly the green energy field and the green energy sector clearly making way in that segment as well. So those are really the big news stories out of the US, predominantly China, as you made note of. The People's Bank of China continuing to pump as much liquidity into that market as possible, hoping to shore up any losses when it comes to the economic drag the coronavirus is likely to have as well on that economy. So we'll see how things fare on that front. And of course, as you noted, some positivity, particularly out in the US and in China. Let's see how things are faring though out in Europe and locally, and we'll get into the details in a bit. As you can tell, there are quite a few green shoots when it comes to the market picture. Even the rand steadying quite a bit. They're having even surpassed 15 rand at some stage as well than last week. So Devin Shute from the Robert Group joins us right here at the Johannesburg Stock Exchange. A different environment to Durban, a little bit more balmy perhaps as well. How are you doing? You well?
I'm good, thanks.
First time this year, so I don't know if we still say Happy New Year, but nonetheless we'll say it. 1% gain for the JSE All Share, and markets really gaining across the board today. Call it a rebound, call it a recovery. Certainly still a good sign for now, I suppose, that not all hope is lost.
Yeah, I think so, and it's been a good 2 days, but what a year it's been. I mean, we started off so strongly, and then the coronavirus really put the cat amongst the pigeons. I think globally investors are struggling to grapple how bad is this really, and what could the contagion effect be. So the Chinese stimulus has definitely helped calm the nerves in that regard, but we still don't know the possible extent of this. If we look back at previous kind of infections, I think what the market is looking for is when that rate of infection starts to slow down, and the sense is that it's starting to get there. So coupled with this liquidity injection by the Chinese authorities, I think we're closer, but man, each day is a drama unto itself.
Yeah. How much further can they go, though, particularly the People's Bank of China? I mean, they keep on pumping this liquidity into that market and continue to try and throw money at the problem, if you want to call it that. How much further do you think they can go in terms of that stimulus package in order to ensure that their economy keeps climbing?
Yeah, look, well, I think they are very intent on ensuring that the impact of this is short-lived. It is going to have a hit on their GDP figures, and they really need to ensure post the trade war and this now that they come out looking okay. So I think the commitment is there, and I think they will continue to do what it takes to minimize that impact in the short term.
Backward theory, or perhaps a crazy theory as well. Do you see the US perhaps helping in trying to find some sort of resolution here for the coronavirus in terms of finding a cure? And the only reason I ask that is because it would only benefit the US for something like that. Otherwise, you get more cases sort of going across the globe, really hurting not just manufacturing but demand as well.
Yeah. Look, I think globally everyone is at risk of this, and I think that's the real fear. So I've no doubt that the US, if they needed to, would step in and act potentially more actively in that regard. The Chinese have done a lot, though. Make no mistake, it came at a terrible time for them. So that was the problem. They extended their New Year's, but they definitely, whether it's closing the highways and the access out of the cities, building the hospital in record time, which most of us couldn't believe, they are acting, and that's what we want to see. But if you look at their market, once they opened again on Monday, that market dropped heavily as a result, lost 6 trillion rand in value, biggest drop in 4 years. So this is a real concern, and I think that this is the number one thing all market participants have to be watching.
That is more than about 6 years of South Africa's tax revenue lost in 1 day.
In 1 day on market.
On the Chinese market.
So it's a real fear, and you can understand them stepping in with the stimulus to stem that.
All right, let's talk about the Brent crude price. It's now up more than 3.5%, or around 3.5% or so, $55.72. Are we just sitting at mid-50s purely because of the coronavirus? This is not purely the sustainable level, surely?
I wouldn't think so. So, I mean, OPEC met and they kind of mulled over what they're going to do with production. They are concerned that coronavirus could lead to globally lower demand. And as a result, they've then mulled this production cut, and you've seen the oil price tick up. I think with all of these issues surrounding the coronavirus, they may be quite transient and temporary, if we get some more certainty coming out. And I think we're slowly starting to see that. It is still too early to say, but I think the oil price may be one of those that comes back once we have it.
I think I've certainly tried to use it as a barometer of sorts to kind of see the sentiment and the sense of how the market has really looked, and not just things like the All Share and the Shanghai Index or the like, but it really has told quite a telling story. One that's also telling the story is the local currency, 1471 now. It did breach 15 rand ever so slightly, 1502 odd against the US dollar. A little bit better off today. What is the correct fair value, though? Coronavirus out of the system, hopefully. What becomes the actual fair value for South Africa's currency?
Yeah, the million rand question, right? Look, what we do know about South Africa is that our yield in a world of virtually zero yield is incredibly good. And what I mean by that is on our government bonds and the like. Incredibly attractive in that result. And that gives a strong underpin to the rand.
Sure.
If you look at purchasing power parity, you can argue we are very undervalued in that regard. So it's a difficult question to answer, but what you have seen is that emerging markets, whenever anything directly affects China, whether it's trade war or virus contagion, we have no choice but to go along with what Big Brother's happening. So the blowouts over 15, purely coronavirus, worried about commodities and demand coming out of that, which directly affects us and affects other companies now. If you think about the Naspers link to what's happening in China, that's huge. If you think about companies like Richemont, who have big suppliers of luxury goods into that region,
10% of their market is
we're
in Hong
intrinsically
Kong,
linked to that, right?
Yeah.
So that is the issue, and I think the rand is also just another one of those barometers that's going to give you a very quick litmus test as to what the sentiment is around emerging markets and us particularly.
Yeah, I wanted to actually just touch on another equity story though, and I'll hopefully move along. We thought that the strength, particularly of South Africa's mining sector, had maybe come back quite a bit, but it seems like Anglo Gold Ashanti have decided, you know, we're not necessarily too keen on staying in South Africa. A lot of their assets perhaps not giving them what they like. They even sold them Boneng just last year. The new Canadian CEOs hell-bent on sort of moving out of the country, if you want to call it that. What does that really say about South Africa in terms of its assets? Are we still, despite the reconstruction and restructuring that we've sort of had of late, are we still sitting in a sunset industry here?
Look, it could be, and it depends on your assets, right? So platinum is a great example of where you would want to have been the last 12 months. Gold maybe less so, and we've been dwindling in prominence globally in terms of our gold production for a while. I think what you've seen other companies do historically is try to limit their risk to any one country. Yeah. So, you know, whether we have risk because of labor, laws, the quality of our deposits, and I think you're seeing Anglo Gold making similar noises there.
All right. Very finally as well then, Edcon, CNA, that whole story is kind of crazy. We just had my colleague Nzinga speak to the RCS CEO as well and really just, you know, detail their plans.
Yeah.
A good move. Is Edcon sort of savable? Yes, fine, they got their 2.7 billion, but you know, can we actually find a better model for Edcon, you reckon?
Yeah, well, look, this will help address the debt pile. We don't know what number the deal was done at, what amount, but yeah, you could argue CNA was non-core, and we really got to see Edcon cutting the space, getting the mix of merchandising right, and really start to effect that transition that they've been so desperately looking for.
Yeah, we'll certainly find out and see how things fare. Of course, the people who have taken over, one of them actually was the CEO of Exclusive Books at some stage as well, right?
Yeah.
So that makes things quite interesting. Thank you so much. Devon Shute there is from the Robert Group, having joined us right here at the Johannesburg Stock Exchange. Around 1% up for the JSE All Shares, so a much better day. The resources also doing their thing, by the seams of it, having lost quite heavily over the last couple of days. 1470 odd for a South African rand, for rather US dollar, is where things really sit for the currency. So that picture kind of tells you exactly where the markets are sitting, maybe slightly more positive, but really hasn't fully recovered as yet. We'll unpack and see how things flow, of course, right here on SABC News. We'll continue to give you some economic news as well, right after the short break with my colleague Nzinga Qunta. For now, though, well, that's where the buck stops.